Okay, welcome everyone to LinkedIn Live. I'm Bruce Eckfeldt. I'm going to do a quick intro, a little overview of our discussion today, introduce our guests, and then we're going to get started. So today's topic is mastering the investor pitch, keys to success. I'm excited about this. A lot of good insights are, I'm sure, going to come out of it. A lot of good stories from our panelists talking about the investor pitch and how to make it work, how to make it successful. I'm Bruce Eckfeldt. I'm a strategic coach. I work with CEOs and their leadership teams on how to scale and exit businesses faster, hopefully with a little less drama. I've got two expert panelists today who I'll introduce. First up, Scott Berman. He is an accomplished entrepreneur and a venture capitalist and investor. Experience with early stage equity and debt investments. He is the host of the Game of Zen podcast, which actually I was a guest on a while ago. And Scott brings a unique perspective, blending business acumen with strategic mindfulness. I'm excited for this conversation, having Scott on. Scott, welcome to the program.
Thanks, Bruce. Great to be here.
Next up, Peter Carabas. He is a founding partner at Key Investment Partners, focusing on investments in early stage cannabis companies. He's based in Chicago and uses his expertise in venture capital and private equity to help businesses grow. He's a graduate of the University of Wisconsin-Madison. Pete is passionate about advancing the cannabis industry. Pete, welcome to the program.
Thanks for having me, Bruce. Excited to be on.
Yeah. So for everyone listening, if you're on LinkedIn, we're going to watch the comment box. If you have a question, go ahead and throw it in there. We'll try to watch that as we go. If something comes up there, we'll try to address it in the program. If you're on YouTube, jump over to LinkedIn if you want to ask a question. We're going to be watching that. And if you're watching the replay, go ahead and put the questions in the comment box. We'll all be checking that in the future here. So even if this is the replay, throw it in there. We'll try to get the questions that come up post program on that as well. So with all that, let's get into our topic and get into our first question. I want to start with just this question of how to identify the right types of investors. I know a lot of groups that I work with, a lot of companies, they focus on the pitch and what they're going to pitch and the deck and everything. But I think one of the things they don't necessarily do a great job is figuring out who they're going to try to pitch and what investors they should be looking at. So I want to start there. Why don't we start with Scott and just give us a sense of, for the investors that when you're working with companies or you see companies pitching, how do you help them figure out the investors that they have? And I'll just say, Pete, I think your iPad is tilted because you're coming in sideways for our guests. You can work on that while Scott does the first question here.
Thanks, Bruce. So great question. I think that the most important thing in the beginning is really understanding what you're trying to accomplish in terms of the sector that you're in, the check size of what you're looking for, and whether or not you would like strategic investors. So this is something I always tell people. It's great to get a check-in, and having passive investors is fine. But if you're able to raise money and have strategic influence and people that could actually help you, that's really important. So as you're looking at different investor bases, can they help me build my business? Can they help me with an eventual exit? Can they help me introduce me to other investors? So what's their network look like? What have they done before in terms of deal flow? Mm-hmm. And generally, what's their appetite for what you're trying to pitch?
Yeah, Pete, your take on those questions. How do you kind of approach the question of who should you actually pitch in terms of raising money?
Yeah, I think Scott brings up one of the most key points is you really want value-add investors, and I think that's a really overused term. You're thrown around a bunch, but if you're a B2B tech company, you want people that can help you and that have experiences and networks in the B2B SaaS industry, for example, board members that have connections perhaps that can help you exit down the road. I just think a huge difference in between a pure financial investor, basically a silent partner, as opposed to having someone that's actually gonna help you. And a lot of times, even those types of investors, even if it's a small investment, I would encourage a company to take it on. A bunch of small investments from people who are experienced in whatever it is that you're trying to pursue. So.
Yeah. I always, this term of smart money, you want to get smart money in, right? Not just people that have cash, but they actually come with knowledge, experience, networks. Anytime I do a lot of board of advisor work, and that's a lot of what we're looking for there. But I think that's true for all this, your investor network as well. I kind of want to actually dovetail on that one a little bit. In terms of finding these investors, what are some strategies companies can use to, find the types of investors that you're looking for? And I don't want to be too leading on this, but are there any techniques or any ways that you would start a search for potential investors if you're just starting the process? You put together a deck, you
Yeah.
decide you're going to raise some money, you've got in the beginnings of a deck. How do you actually go about sorting through the world of investors to start finding a list?
Yeah, I mean, I
Go
can
for it, Pete.
jump
Yeah.
in there. Yeah, for sure. So I would just say, first is you want to understand, okay, are you looking for high net worth individuals? When to go raise institutional capital or capital from funds?
Yeah.
If you start out a company, raise some money from friends and family, and now you're on to the next stage, okay, you want to, raise capital from a fund. The biggest thing to find out is the easiest, I should say, is what companies and what investments has this fund made
Yeah.
in the past. Do they even invest in companies like yours? And I think one thing that people miss a lot, or companies miss a lot, right, is that um, you'll find a company that pitches you and it's not the right fit. For example, you pitch Key Investment Partners, and Key is focused on cannabis companies at this stage, and we might say, no, we're not interested. That has nothing to do with your company. There's so much behind the scenes, right? I mean, you have portfolio management. If we have 3 deals of our 15 in a fund that are retail cannabis operators, the fourth one might be as a portfolio management decision. We could say you have a great business, but you don't fit in our portfolio. So I think the timing, understanding the objectives of a fund manager, and I would just say ask them, as you get to know various different funds.
Scott, any thoughts on how you go
Yeah.
about finding?
So certainly I agree that research is super important and understanding who the investor is. I've had a lot of success over the years, just in person at networking meetings, conferences. I go to a lot of things, a lot of events, and I talk up deals or talk up what I'm doing. Certainly that's how the cannabis industry really got big, was a lot of big shows,
Yeah.
conferences. I also think LinkedIn is a great resource, reaching out and just connecting and just saying hello and saying I have a deal in a certain sector. And then using your own network of friends and relatives to say, hey, do you know anybody? It's amazing the network effect, the butterfly effect or whatever of my net. I have a pretty good network. I talk to Pete. I know he knows a lot of other people that I don't know. So we collaborate and say, hey, there's a deal we're looking at. And then, there's a lot more people that could potentially be interested.
Yeah, it's kind of the 6 degrees of Kevin Bacon
Yeah.
kind of thing.
Yeah.
You never know who's connected.
Exactly.
Yeah.
I think one particular strategy I wanted to get your take on is looking at competitors, like, competitive companies in the market and who their investors are. I've heard on one hand, you don't want to go with those people because, well, they're already tied in this other company. I've heard other cases where it's like, no, go for them because they know the market, right? They've already done the research. In fact, some of these people might want to diversify their portfolio a little bit by getting in on a couple of different players in the market. Guess what's your take on that, kind of going for investors of your competitors? Any pros, cons, or thoughts on that strategy? Either one of you can chime in on that one.
Well,
Yeah.
Go ahead, Pete.
I would say the first thing is I think there's a fine line between if you're going after an investor that has any governance or board control, that's probably a no-no.
Mhm.
You don't want your competitors, investor and board member also on your board, and usually they're precluded from
Yeah.
doing stuff like that. But generally, I think it's a good idea. I mean, if you see your competitor's cap table, right, and you're once again a B2B SaaS business, there's a list of people that do B2B SaaS deals, and they might have that deal and 5 other deals. So to X them out of your pursuit, so to speak, I wouldn't make any sense to me. I think a lot of times investors like doing the same thing, the things they know, especially once they're successful with it.
Yeah.
Yes, I would definitely recommend doing it. I would be careful. First of all, get NDAs in place.
Yeah.
Second of all, maybe create a teaser for your deck or a one pager or something until you have the initial call, because you don't want a competitor to just take your phone call so he can learn everything about your company. But also, though, a lot of these guys will bet on several different companies. If they like the sector, they'll make multiple bets and figure out which one will be better over time. You can also learn a lot just by having the conversation with them. about what their other company is doing. So I think it's useful, but definitely proceed with caution.
Yeah. Yeah. The other one that I've come across, I think twice now, is um, that the investor ends up brokering the acquisition. So in a case where, there's going to be a roll up in this industry, by having a relationship at the investor at the cap table, right? It becomes this conduit for actually being able to do, potential mergers, acquisitions, roll ups, because you have these relationships and you actually can form almost like a joint venture at some level. Particularly, I mean, if you're a super direct competitor, it's hard. But if there's these, it's kind of complementary, or you're touching a little different part of the market, or maybe you're a little different in the value chain, or your tech is kind of different parts of the process. Oftentimes, those become really interesting ways of creating relationships that actually lead to the mergers. I see a comment on coming through on that. Investors don't usually sign NDAs. I think that is true, but yeah. So I think it's always how to appropriately kind of share what you need to be able to have the conversation, but obviously not oversharing in those things. It's always a bit of a game. So I know a lot of people think about, okay, how do I pitch to investors? What do we need to tell them? How do we convince them? All this. But I wanted to talk a little bit about the flip side, which is in that conversation, what should you be asking investors? Because I think a lot of people are so focused on selling, they forget that it's actually a two-way, conversation, and there's a kind of a two-way fit. What are things that you suggest, founders, CEOs raising money? What should they be asking investors at what stage of the process to really understand is this the right investor for them? Scott, why don't you give us a couple of things and we'll go to Pete.
So I think their background is super important. What have they done in their career? What other investments have they made? Do they have experience in that sector? As Pete mentioned, can they help you with value-added services too? So what, are they just going to be there for the ride, or can they really be a difference maker? So I think that's also, and personalities are important. Understand, getting along with them, and eventually some things don't always go the way you like it, and you want to be able to communicate properly. You don't want to have arguments down the road with investors. So you have to kind of have some sort of rapport with them, and you don't have to be best friends, but you have to make sure that you can live and work with this person till your eventual exit.
Yeah. I always say that the only certainty is things will not go as planned.
Yes.
Yeah.
Pete,
I love that one.
Any thoughts that you have, Pete, on this?
I can speak from kind of through the fund manager lens, and I would say, if I'm a company, I would definitely want to understand, is the capital discretionary, or if not, where is the capital coming from? I would want to understand what type of LPs or what type of investors do they have? I mean, are these institutional investors? Are these family offices, high net worth? I'd want to understand how much capital they typically deploy. And I think most importantly, I'd want to understand where, if it's a true fund structure, where I fit as a company within the fund strategy. So to my earlier point, are you the one B2B SaaS deal in the fund, or are you a small bet of many in a similar sector?
Yeah.
Are you the earliest stage company? Are you the latest stage company? And understand that all with the understanding that, right, it's they're with a diversified strategy, right? You don't want too much of the same investment. So yeah, I'd say that. And
yeah,
go ahead.
I always find it interesting that how much where a fund is in its process, what else they have in their portfolio, how much of that affects their decision making and their kind of aggressiveness with trying to get deals. Because I think it's just like as a buyer, as a CEO, right? Like I need the money to deploy, and there's timing issues, and I might change my willingness for different valuations or terms based on my need and the situation. Same thing is true on the other side. Like a fund duty is to put capital into the market. If they can't do that, if they're under pressure to do it, they're going to make different terms versus if this is their last deal and they can kind of do it or not do it, like they'll have a very different perspective on this. The other one I was going to say is one of the things I always love to do is talk to other companies they've invested in. Go talk to the CEOs and to the boards, or to the people on leadership. Sometimes it's even not a CEO. I'll find someone else on the leadership team of that company, and you just get the inside scoop on like what has it been like to work with that investor. And sometimes it's like, okay, yeah, like when things did go sideways, how did they respond? How did they work with you? Or things like, how well did they actually make introductions, right? Were they helpful, right? That seems like they've got really great contacts. Are they
Mhm.
good at bringing those to the table and actually helping the company grow and succeed? I think that has been a really interesting insight for me in terms of things you can learn about a potential investor that may actually color either if you're going to do it or how you're going to do it or where you're going to put them kind of in the cap table. Um, so let's talk about the pitch itself. I guess what are some common mistakes, challenges that you've seen founders, CEO going when they go into the pitch? Like, what are one or two things you think that there are common mistakes that they make when first talking to an investor? Scott, why don't you give us your take?
I think one of the things that the mistake that I see is too much information about the market and what the company is going to do in the not in terms of like the big market, right? So in other words, in cannabis, there's half the slides are about how big the cannabis space is going to be.
Yeah.
Now, me being an investor in the space, I already know most of that. I know it's going to be big. How are you going to? I want to see more about how your business is going to start, thrive, and exit, and less about the total number of cannabis sales that we're going to have next year. And so that's important. I also think having not enough information on the financials is really a thing I see, and not enough information on how potentially you're going to exit the company. So what's the long-term goal? What are your projections look like? And they don't all have to be in your pitch deck, but there has to be some directional information that gets me interested in taking the call.
Yeah. Pete, what's on your list?
Yeah. Yeah, totally. No, I fully agree with a lot of what Scott said there too. I think on my list okay, what are you really looking for? I mean, okay, you have investors that are they focused on an early stage? Are they focused on a later stage? And okay, so what do you want to include? My biggest pet peeve is, okay, you have an investor, a company come on and they tell you about 10 different product lines when they haven't really developed one. Or they tell you about what their company looks like in year 5 when they're in year 1. And so too many shiny objects and too much confusion. I think most investors, they're already okay if they understand and like what you're doing. They want to understand what your next 18 months looks like. They know that, 2 to 3 years, even that far out, it's just going to look totally different, right? So focusing on the problem you're solving right now, how you're going to get there, what you're using your cash for, and that's how you give investors comfort.
Yeah. Go ahead, Scott.
Just wanted to add one other thing is that more information about the team is always important. And not just you and what your background is, but who's your core team of people that are going to be advising you. Do you have a team of advisors, people that have been in this and been through this before? It's like bet on the jockey, not the horse. And a lot of times the team really makes a big difference.
Yeah. The things that I find, when I'm typically working with companies on getting them ready and kind of putting some of these decks together, the team, but also really what are the commitments of that team? Because it's easy to throw a bunch of photos on a slide, but actually showing like, okay, like how much time are they putting in? What are they getting compensated? Like what have they put at risk or what have they invested in to the company is a really important one. And then showing existing performance, right? I think, being able to show an investor, look, we've been doing this for 18 months or 24 months, and this is what we've achieved so far. And being able to show them, like, we made these plans, we've executed on these plans, we've hit these numbers, right? Being able to show at least some amount of track record of setting an intention, planning it, executing on it, right? We'll give that investor a sense of, okay, well, they've got some track record here, even on an early stage company. And then, I think that 12 to 24 months is about as far out as we go, and anything that's reasonably specific, right? And then anything after that is going to be like, it's a bit of guesswork, but we know if we can plan out the next 12 months and show a pretty good, logical and reasonable pro forma about where we're going to go, then I can kind of extrapolate that. I say, okay, I can see how that's going to continue. And then I think to Scott's point, just what is the exit, right? Like I think one of the things that a lot of people trying to raise money just forget is at the end of the day, investors want their money back, right? This is not, okay, I'm just going to give you a bunch of money and then sit back. I mean, unless this is, a restaurant or something, and I'm just going to be an owner and I'm going to like make a annuity over some period of time. But like, you got to get money back somehow. And when is that going to take place? How is that going to take place? What do those numbers actually look like? That's top of mind for an investor. And if I'm an investor that needs to turn this thing around in 2 or 3 years, that's really different than an investor that can wait 5 to 8 years on the money. And not knowing that going into the conversation would be hard. But if that's a mismatch, that's probably not going to be a great deal.
Yeah.
What else do you feel comes up in terms of things you can do to connect with a potential investor as part of that pitch? Things that you need to make sure you cover or sort of land in order to make an effective pitch for an investor. Pete, do you have any thoughts on that one?
Yeah, I think above all else, I would say once again making sure you understand what that investor is looking for, right? Someone doing a real estate deal or versus someone doing a early stage cannabis deal, they want totally different things. So setting expectations, understanding what the investor's expectations are, because as you just said, when you have a mismatch, that's the worst because you can be doing well and executing a plan, but if someone wanted their money back or was expecting X return over X period of time, and you're not aligned on that from the start, and even when you're doing a good job, you have an issue with somebody. So
Mhm.
Yeah, it's going to be a problem right off the bat if those things aren't
Sure.
aligned.
Yeah.
Scott, how about you?
So first of all, the comment about pro forma in the appendix, that's
Oh, yeah.
always a good idea. And I would add the word realistic pro forma. and just don't be saying you're going to do 1 million next year and 12 million, 6 months later. So being realistic about your numbers is important. Also back to the competition, really understanding who the competition, how are you going to gain market share with your product? And is it a super crowded industry or not? And that actually makes a big difference in your first couple of years.
Yeah. How about when you're actually kind of doing the deal itself? I know we were talking a little bit about negotiation tactics, or not so much like gambits, like how do you sort of trick them into doing a deal, but just like the elements of a negotiation, things that you need to kind of be thinking about as you're moving towards a deal. What are the key terms or parameters as a founder CEO you need to be thinking about that are going to be on the table? You probably need to have some sense of where you want to land on.
Well, I would say certainly valuation is really important. How are you raising the money? Debt, equity? What's the form? Is it a safe note? Is it, what kind of raise are you doing now? And also, what are you going to need later? So one thing I see, a lot of people say, we're going to raise all our money now. We're going to just go for it and do everything. Some other people say we're raising a series round and next year we'll raise an A round once we get some traction. So understanding when your next raise might be and how much you will need to get there, how much runway do you need to get to that point, and what will your valuation look like? Because if you get going and things go great, you can raise money in a year or two at a higher valuation, and all of your investors are going to be happy about it.
Yeah. Pete, what's your
Oh,
take on
yeah.
that?
Yeah, I would say you want to understand, okay, if things go good in most investment securities, everyone's happy. You want to understand how your equity is affected if you're a founder or an investor for that
Yeah.
matter. When things go bad, you want to understand the downside. I also will say one quick thing we always think about is whenever you raise capital, you always want to think about, okay, when I raise my next round, how are the terms of this round going to affect that round? A lot of times what you see is, especially when the market's really hot, you see a frothy market and they go raise at a super high valuation and it's very company favorable. And then down the road, even if the companies perform, they're between a rock and a hard place because they've already raised at such a high valuation
Yeah.
or what's such company favorable terms that there's no way that their past investors won't be disappointed because they've put the target up this high.
Yeah. I see that happen a lot, which is this kind of issue of how much do I raise versus when am I going to do the next round? Like if I raise too much, I'm basically raising on a low valuation and I'm kind of giving up a lot of value. If I don't raise enough, am I going to make it to my next round? Am I going to put myself in a situation where I run out of cash? In which case, all right, now I'm in a really bad situation. I'm taking whatever I can get, right? And really kind of thinking through, how much do I need? What's my next raise point? What do I need to do to show that get to that point, right? You want to be raising on clear milestones of the business, like, hey, we've got a certain amount of traction, now we're going to scale. And the kind of the levers that you have there become important. And try as a founder and CEO, that can be difficult, is figuring out exactly how much I should go and what my next round is. How about in terms of board seats and things like that? Like, how do you navigate some of the other things that come with bringing in investors? Any advice or things that you need, that founders should be aware of or expect as they go through these processes?
I would say one thing I've seen a million times at this point is be careful giving out board seats, and that I would include board observer seats in that. Give them to people who are really, they're going to be with you for a long time. You're going to be meeting with them, seeking advice from them. So you want to construct a board that I think is the right size, and with the right people. And it sounds simple, but especially in cannabis, where you have these fragmented capital stacks, you end up with 7 voting board members, and then you got 5, 6, 7 board observers.
Yes.
And what that creates is the big soup of
Yeah.
definition of too many cooks in the kitchen.
Yeah.
So boards, tight, small teams that are value add.
Yeah. Scott?
Yeah, I also think it's important to anticipate potential problems that may occur, and how will the board members be either helpful or not if things don't go the way, like you said, Bruce, doesn't always go the way you plan. So is this guy going to step in and help me and guide me along the way, or are they going to become a problem?
Yeah.
That's really important. And I also want to add, I think mentors are very important. And having a board member that can mentor you and guide you and help you, it doesn't matter how old you are, just have someone that can advise you on, because there's challenges, but there's also a lot of benefit to having someone that's been through it before that really can help you, guide you.
Yeah. Yeah. How about post raise? Like, so you found an investor, you cut a deal, you get the money, they're on the board, or you have an investor relationship now. What are some things you need to do to either leverage that, maintain the relationship? Like, give me some ideas post doing the deal that people need to think about.
I would say, sorry, Scott, I would say post the deal, I think above all else, I would just say communication and consistent communication. Yeah. Good stuff's going to happen. Bad stuff's going to happen. Any sophisticated investor is going to know that and expect it. But periods that go by with long periods where you're not communicating, it's just the worst for everybody. Yeah. I'd also recommend, having like a very regimented board meeting schedule, whether it's board meeting or just investor update schedule. The best deals and the best relationships I've seen are, you'll have, not everyone needs to do this, and not every investor wants this, but people who have, every other week or even every week, hey, let's just get on a 20-minute call. Here's the stuff we're doing. Can you help with this? Can you help with that? You have other boards in particular, and that doesn't need to be a structured board meeting, but you can also have boards that they meet quarterly or even biannually, or only if they need to make a decision. And these long periods of time go by, and what happens is you miss the conversations where, oh yeah, that person, yeah, we're trying to get this new client, oh, your buddy from high school works there. You miss that type of stuff. So it doesn't need to be long board meetings, but regimented communication and quick communication.
Yeah. Scott?
Couldn't agree more. Communication is really important, and it's frustrating when it doesn't happen. Yeah. And don't be afraid to share bad news. Anyone that invests in something knows they could lose their money.
Yeah.
So just be transparent and communicate. And if you need help, ask for it.
Yeah. Yeah. I always say that the only thing worse than, having a problem in business is a surprise. No surprises. I don't care about it. It's just don't surprise me with it.
Yeah.
This has been great. I know we're going to hit time here. Scott, if people want to find out more about you and the work that you do, what's the best way to get that information?
Best way is just LinkedIn. Scott Berman on LinkedIn. Hit me up there. Happy to chat. I'm involved in a whole bunch of different things, including cannabis, but raising money for other sectors as well. So be happy to chat.
Excellent. And Pete?
Yeah, my email, Pete@keyinvestmentpartners.com, and our website. You can find us which is keyinvestmentpartners.com, unsurprisingly. But yeah, feel free to reach out whenever. We're all about taking as many new calls as possible and making as many connections as possible. So.
Perfect. Thanks, gentlemen. And you can reach me at bruce@eckfeldt.com is the easiest email, and eckfeldt.com is my website. And then all of our LinkedIn's are on the page here for LinkedIn. You can click through and get us and contact us there. But Scott, Pete, thank you so much for joining us today. It's been a pleasure.
Thanks, Bruce. Appreciate it.
Thanks a lot, Bruce.